Hello, everyone, and welcome to Canadian Investment Simplified, where smart investing becomes simple. If you've ever looked at the stock market and thought, where do I even start? You're in the right place. Think of me as your finance buddy. With over 20 years of experience in banking and finance, I'll help you make smarter investing decisions without the complicated financial jargon. Whether you have $100 or $100,000 to invest, this channel is designed to help you grow your wealth with confidence. So, if that sounds like something you're interested in, hit subscribe and let's simplify investing together. Today we're talking about a stock that many investors believe should be in every long-term portfolio, Nvidia, ticker symbol NVDA. Let's look at why this AI giant continues to dominate the industry and whether it's still worth buying today. Nvidia just got cheaper, not the stock price, the value underneath it. After the recent pullback, Nvidia now trades at roughly 16 times analysts' earnings estimates for fiscal 2028. 16. For the company sitting at the center of the entire AI build-out, that is not an expensive stock. That is one of the most mispriced names in the entire semiconductor sector right now. Here's why that number matters. A forward PE of 16 means it is one of the best bargains in the chip space. And while the use of data center processing power is shifting toward more inference and agentic AI workloads, the company is also well-positioned here. NVIDIA has transformed itself from a simple GPU maker into a complete AI infrastructure player, offering end-to-end servers designed for specific AI tasks. Its acquisition of Grok gave it chips designed specifically for inference, which it has incorporated into its CUDA ecosystem. Meanwhile, its networking portfolio has become the fastest-growing part of its business. NVIDIA is experiencing the kind of revenue and profit growth that very few companies ever achieve, driven by strong demand for AI infrastructure. Before we go any further, if you're finding this video helpful, take a second to hit the subscribe button. Here at Canadian Investment Simplified, we break down investing, stocks, ETFs, and personal finance into simple, easy-to-understand videos so you can make smarter financial decisions. Now, let's get back to NVIDIA. NVIDIA is much bigger than its competitors in the AI chip industry. It generates more revenue than companies like AMD, Intel, Broadcom, and even TSMC. NVIDIA dominates the AI chip market and has a strong lead over its rivals, controlling about 87.90% of the market. It has a powerful software ecosystem, sells complete AI solutions, and earns enough profit to stay ahead. NVDA is also the AI infrastructure leader, with financials, growth, margins, cash flow that few companies in history have matched. NVIDIA's revenue has grown at an incredible pace over the past few years. Annual revenue increased from $27 billion in FY23 to $216 billion in FY26, with an estimate of $335 billion in FY27. That's about 65% revenue growth in FY26 alone. The company also earned around $120 billion in net income, showing that it is not just growing fast, but is also highly profitable. Overall, NVIDIA's revenue has increased by about 8 times in just 3 years. A company that already repositioned itself for the next phase of AI demand before the market gave it credit for doing so. A company whose fastest-growing business line is barely part of the conversation. A company standing at the center of a build-out that is still accelerating, not cooling off. And all of that, priced at 16 times forward earnings. With strong growth still ahead, NVIDIA remains a top stock to own and a good buy at its discounted valuation. The pullback didn't break the thesis, it discounted it. And that's exactly why NVIDIA remains a stock worth owning for the long term. Moreover, Wall Street's confidence in NVIDIA is hard to ignore. Of the 37 analysts tracking the company, 36 have a buy rating, with only one choosing to hold with an average price target of $309. Thanks so much for watching. I hope you found this video helpful. If you did, please give it a thumbs up and hit the subscribe button. It really helps the channel grow and allows me to keep creating simple, practical investing content for Canadians. This is Canadian Investment Simplified, where we make investing easy to understand and help you make smarter financial decisions. Thanks again for watching, and I'll see you in the next video.